Okay, good morning everyone and welcome for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Erik Sandstedt from Handelsbanken. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow. Please go ahead, sir.
Thank you very much, and of course let me also welcome you to our financial report for the third quarter in our fiscal year 13-14. For today we have outlined an agenda for this meeting where we will go through the highlights of our third quarter. We'll also comment our progress on our first 9 months in our fiscal year, as well as I would like to give you an update on our strategic initiatives and priorities. And then, as announced, Erik from Handelsbanken will then lead a Q&A session. But before we go into the key ratios, I just want to provide a quick snapshot of our historical development, particularly the last 25-30 years, which I think provides and reflects a fairly strong track record of profitable growth with several of initiatives, everything from launching into new markets, launching ourselves into an omni-channel, as well as driving growth through expanding with our store growth. Looking more near term now, I think that today our position has never been stronger. We have a very high energy in the organization also to develop us further on this journey. With our 182 stores, with over 36 million customers in our network, and also with the recent award of being awarded as the most trusted brand or one of the top brands in retail, I think the energy is there to continue to drive our position to next step. And I think the reason for the position is very clear in terms of our commitment to solve many of the small practical problems for our customers, something that is driven behind our clear uniqueness in our position, in the way we position ourselves with our broad range, with the location, with the service of our staff, and with a sustainable operation. That was a leading in to the third quarter and then our financial results. And if I just want to highlight where we stand, I think in one picture we would like to say that we've had a fairly healthy growth of 7% in local currencies, and particularly 3% growth in our like-for-like units. We've seen an impact of negative currency effect, particularly on the sales growth from the strong Swedish krona versus the Norwegian krona. We have also improved our gross margin in the quarter, and we are reporting our strongest operating profit for seeing that in one quarter over time. Looking at it of a little bit longer perspective, in a 3 years perspective, we can also conclude, and it's clear, I think, for everyone, that our third quarter is our largest and most important quarter for Clas Ohlson. In sales in SEK, we noted a 3% growth, then impacted by the currency, also highlighting kind of a milestone for Clas Ohlson that in this period, for the first time, we passed 1 billion SEK in turnover in 1 month. So a healthy Christmas period for us this time. Our operating profit is up to 330 million SEK, which is an increase of 34% versus last year. But should be, and you see this in the picture behind me, it's also in the perspective of that last year's quarter 3 was on the somewhat softer side. Going in by market, and just a quick reflection before we go into to the data by each country. I think it's clear now to conclude and that our international business now in Clas Ohlson is clearly larger than our domestic, which is a data point as is in terms of our vision to become an international retailer. Looking then into our largest country still, Sweden. And some initial comments regarding the overall market. And we used to look at this from a consumer confidence perspective. And it's clear that consumer confidence in Sweden is going in the right direction. We have an upward trend. We are now balancing on historical levels, still somewhat fragile, but it goes in the right direction. Looking then into how we have performed in Sweden, we can see that the market trend is somewhat also reflected in our figures. With the growth of 4%, we have seen a clear uplift in our traffic to our stores, and we're also pleased to see that our conversion is improving. And it's also in terms of our ticket values, even if that's more of the flat side, but it's still clearly that we're starting to see an increase in traffic to the stores, which is very positive versus some of the historical data. We have opened up one store in this period in Lund, in south of Sweden, and now have 76 stores, and we are growing with 4% to above 1 billion SEK in the quarter. Norway, on the opposite, in the past months, we've seen a drop in the consumer confidence in the Norwegian market, coming still from a high level, and we believe it's some of that this concern is impacted by the overall worries in the overall housing market in Norway. But to the opposite, in terms of our figures, we are very pleased to see that we are continuing to grow and have a clear uplift as well in our stores in Norway in terms of traffic to our stores. And local sales up 8%. We have 3 more stores in our network, and as you've seen here on the chart, we have a substantial negative currency effect versus the Norwegian krona, so we are reporting a 2% decline in SEK versus last year. Moving into Finland, based on the Finnish consumer confidence is still fairly skeptical, and also even if we are now seeing some uplift, but we are on the low side below historical levels. Something we also have noted from other retailers when they are reporting their sales performance, what we have seen. In our case, and I think we noted more on these concerns in Q1 and Q2. However, in quarter 3, it's somewhat pleasing to see that we have also in Finland seen a clear uplift in our traffic, clear strengthening of our position. We are growing with 14% in local currency, and we are gradually taking steps to strengthening our position in the Finnish market, despite the market is still somewhat weak. Moving on to UK. UK, as in general comment of UK, is going in the right direction, coming, as you know, from a historical low consumer confidence. Starts to pick up. It started to pick up in the summer and continued to go in the right direction, even if we saw that it was somewhat late Christmas trading in the UK. It's also somewhat influenced by the weather conditions that UK have faced during this period with extreme flooding and so on. Looking into our numbers, we continue to go in the right direction. We are growing with 5%, and that is then on a like-for-like basis. We still have, though, some clear ways to go there in this market. But with the upcoming spring, where we're now going to continue to, and we will increase our marketing investments to continue to drive our brand awareness and strengthening our position in the UK market. Leaving the sales numbers and moving into our gross margin development. As seen on this slide behind me, our long-term development is clearly in the right direction, which is the results of the efforts we have made and continue to do in our sourcing. The sales mix development goes clearly in the right direction. Our private labels continues to do better and better, as well as our investment in our distribution center improves our overall efficiencies, which is then also reflected in our gross margin development. But it's of course important to state that we will continue to see variations quarter by quarter. As you may remember from last quarter 3, we had a dip in our gross margin. We've taken that back in this quarter, so it will go up and down by quarter, depending on the market situation. But on the long-term direction is though on the positive side. If we move into this quarter, we can conclude that many of the items in our overall, what we call cocktail that influencing our gross margin, has really gone in the right direction. All the items in terms of that is reflected is fairly positive, big as small. But it was also, again, worth reminding that last year we had a clear dip in the gross margin in Q3, so we are meeting somewhat easier figures, resulting in that the gross margin in this quarter is up 2.5 percentage points versus last year. Let me just influence some of the impacts. The positive sales mix clearly in the right direction. Everything from that, the mix between the categories is having a positive influence. The mix within the product mix is doing also good. In this case, in this period, we've had a warm winter reflecting a product mix within the categories that has been positive. And also, again, positive brand mix, where particularly our private label development strengthening from quarter to quarter. Another key area, particularly influenced from last year, reminding of last year we had one of the softest Christmas period in many, many years, resulting in that we had a strong level of activities to activate our products and high level of campaigns and higher level of pricing in our campaigns, as well as a higher share of markdowns. And in this year we have been more successful. We have a better market. We've been more successful in the range mix as well as in the campaign mix, which has resulted in a clear improvement versus last year. We continue to have some currency effects. As reported last quarter, we have the influence, particularly from the Norwegian krona influencing our gross margin, but it's very much balanced by the hedging and the strength, the effects we get from the dollar. Now, as you can see on these charts, we start to see that this gradually starts to fade out. Of course, will depend on how the currencies moves, but as it looks right now, with particularly the dollar, who is fairly flat, we'll start to see this gradually fade out. The same in terms of sourcing. We had a positive effect of that in last quarter. We continue to have a favorable effect of this in this quarter, with some of the volume we've had and the sourcing we have in our inventories has now been rolled out and continue to have a positive effect from the lower sourcing cost from the freight perspective. Very much also reflected on that we had a peak a year ago and now a dip, and that, as you can see on this one, is also, we'll see everything equal, this flatten out over time. Moving along into our share of sales cost is down to 27%, which is very much a reflection of that we have a positive like-for-like development. We have, as you've seen, a lower number of stores that we open up, so the startup cost is lower. And we also have a lower marketing spend in this quarter versus last year, which is also will be some of the activities is now being forward to the Q4 and some of the spring and late winter activities. So that will balance out over this fiscal year. This sums up to a third quarter of a record profit after tax at 254 million SEK, which is an increase then of 25% versus last year. Leaving the third quarter's key ratio and moving into to our first 9 months of the fiscal year. And I'm just going to make that a quick summary in the highlights. We seeing a healthy growth of 6% in local currencies, again for the full period, impacted by negative currency effects. Like-for-like is up at 2%, and this is resulting in also that our operating profit is up by 22% versus last year to 549 million SEK. We continue to invest, but at this stage, somewhat lower level versus last year and versus 2 years ago. The reason is lower number of new stores is a clear indicator on this. We have a significant lower number of new stores that we've opened up versus last year, same period. We have somewhat lower IT investments, but also reminding of that we are still in the preparation period for starting our work with our new IT platform. So these investments will come back when we start to roll this out. Cash flow is strong. Cash flow from operating activities at 652 million SEK. Influenced here as well on the inventory that you can see on this slide that inventory is slightly up. It includes 10 more stores, but particularly also it includes some of the winter range that we've had somewhat softer sales on in this year. But our net cash is an uplift. We have a net cash holding of 367 million SEK versus last year of 261. I'm going to hold up and stop there for the key ratios and moving into what have happened after the period end. And I think in our case, we are positive to see that the fourth quarter have had a healthy start, with an uplift of 8% growth in local currencies. We see a positive trend in all our markets and still influenced by currency. So the total growth in SEK is up 6%. Worth mentioning here is that you see that we are now reporting outside Nordic as a segment versus historically UK. And the reason for that is clear, that we are about to open up our fifth country in Dubai, or not a country, but the next store in Dubai. And as always, we have no interest of being transparent in terms of by store basis. So we are adding this up into the segment. And for the sake of being transparent in this, we will on a quarterly basis indicate the UK performance so you still can follow that. And if I make a comment on the February UK, you can calculate this as we have added that this figure outside Nordic is influenced by the stock build-up to the store, to the franchising store. So that indicates that we are from the UK, we are having a same performance, slightly better performance, same to slightly better performance in the UK in February versus the trend we've seen in our third quarter. Moving along into starting up with the spring, we have also a lot of activities and high energy in developing our range and continue to drive the range development. As an example, we are launching now a completely new paint category, which is actually one of the more frequently asked questions by our customers. So we want to fulfill that need. We have taken in a range with an eco-friendly or eco-labeled product and the full range on that. And we started this in Norway in February with a very positive start. And we now plan to, or we will roll this out the coming months in all the rest of our markets. So our paint was eco-labeled, and continue on that comment. Another very positive initiative that I think creates a lot of engagement and also positive thing for the environment is the battery hunt that we are about to initiate. And we run this activity in Norway that was extremely successful. We're now adding it into Sweden as well, so both Norway and Sweden, where we are engaging over 40,000 fourth graders in these markets that will collect used batteries and bring them into to a Clas Ohlson store, so we take care of recycling them, and also, of course, that creates an engagement, saves good things for the environment, and for the best school class that is winning this will get an award for this. So it is a positive activity together with Håll Sverige Rent and Batterijakten in Norway, as well as with Varta. On the same sustainability agenda, we're also pleased to report that we have signed and implemented a new agreement for our in and outbound transports. This will lead to that in large parts we will go with more train versus what we have done historically, particularly on our outbound transports. That will give significant reduction on our CO2 footprint, which we think is very pleasing, as well as it will also shorten our lead times in several of our stores. And of course, as a bonus, it will also improve our efficiencies and save some costs. That was some of the highlights of the quarter, as well as our 9 months, and some of the activities that we have seen after the period. If I'm then going into our strategic agenda and some of the strategic priorities, and maybe before jumping just directly into them, just give a few words about some of the key trends that is influencing our way of looking at the market and how we're moving forward. No big news in this, but it's I think it's clear to worth mentioning in terms of where the consumers are and the industry we are looking into, where you face a more conscious consumer today with focusing on the clean and green activities to secure that you're making good choices. The demand for quality and service is increasing, etc. You also see a clear now with the new technology, the demand for accessibility and information, with of course the new mobile technology with information in your fingertips creates new interest and also a request for having information very quickly and speedy. And some of the comments that we see with the more time-pressured consumers in terms of they want to be inspire me, give me the solutions, but then also make my shopping very hassle-free. So there are requests and activities going on this. At the same time, the retail landscape is reshaping in a way with new types of competition, with a growth in terms of shopping centers who is working on the service, working on the inspiration in the shopping, making that experience even more positive, as well as, of course, the e-com and the e-com entrance in that makes also global competition in a different way. Which, of course, all these trends, as you look at it, when changes is coming, it also creates a lot of opportunities to gain market shares for the one who is stepping up. In our views, when we look at this, one of the core strategies we're working against is the omni-channel strategy, where we want to make sure that the experience of a Clas Ohlson customer should be, as the industry talk about, the seamless experience, no matter where you are, no matter how you shop, if it's in the mobile, if it's on the net, or if it's in our stores, you should face one Clas Ohlson in a smooth way. I think we've taken steps in this, but I also say that we are seeing really good progress, but we also have still a long way to go to continue to develop ourselves on this journey. If I make some comment on this, of course, some of the development in our sales channels is critical, where the stores that we have, we are continuing to convert our stores into the new store concept, which includes more inspiration, includes more ways to serve our customers in a better way. We continue as well to develop both a new concept in terms of taking next steps in this, where we are improving our sales solutions. We're also looking into optimizing our locations for our stores to meet the consumer demands. On the online channel, continues to see a very positive uplift in our traffic. The recent trend as well in the conversion, if you see in the reports from Jan and Feb, is up 25% in our sales. But this is very much working on to link this together and drive that commercial agenda. Another area is our rewarding and looking into our loyal customers, where we have launched just a year ago our Club Clas, the loyalty program in Sweden. We must say that it has over-succeeded our expectations in terms of members. We are now up to over 800,000 members. It's a very positive initiative, which is of course also provides for us an opportunity to give our loyal customers more relevant information and service, as well as this gives us a lot of information as well on how we can understand and learn more about our customers, and it creates also higher efficiencies in our marketing activities. We plan now to roll this out into other markets as we move along during the year. I talked about some of the sustainability initiatives, which is part of our core positioning strategy. And of course, this is important as we move along. A basis for this is our sustainable sourcing, where we continue to develop with we continue to do over 400 audits a year, but focus is also not so much about the audits, it's very much in terms of how we continue to work and develop the manufacturers in the right direction, which is very much a collaboration together. This will continue with high energy, which is a base for us, but we're also driving our position in terms of our products to have a range that is reducing the environmental impact. We have introduced the spare parts, and we have seen over 40% growth in our spare parts, which is very positive for the customers that they can repair rather than buying a new item, as well as if they are not ability to repair yourself, we have a workshop that could help the customers in this area. This agenda will continue and will drive that further on. Another area in terms of growth initiatives is to improve our offer towards the business-to-business segment. It's an initiative that we are focusing on particularly the small to medium-sized offices, where we're adding a range. We are working to simplify it for these customers to really benefit of the values of what Clas Ohlson has to offer. This is one area that we are spreading and using, particularly the strong brand that we have, particularly in Sweden and Norway. Another exciting initiative is the growth into a new market, and particularly I would say also where we are adding franchise as a new operating model for Clas Ohlson. It's the first time, and we are now getting a new part of our business that also is on the franchising side, which creates long-term interesting opportunities. But of course now the first step going into the GCC region is our first initiative where we are moving into a fast-growing market, and of course it's very exciting to see in terms of we are first time outside Europe, first time with our range outside Europe, where we are now adapting to fit into the demographic in this area. We've started, and as you see on the picture here, you have the store manager and a team member from who's now up in Sweden, in Dalarna, and being trained on the way Clas Ohlson works. And plan now is to open up before the summer in the Murdif shopping center that we announced in January, which is one of the region's largest shopping center with 430 stores and over 20 million visitors a year. Outside franchise, we continue to drive our expansion agenda, where we have laid out and be clear on that the next market we plan to open up is Germany, a very interesting market where we have identified a clear gap for a Clas Ohlson concept. We continue to prepare. We are now very much in the phase of looking into where the store should be located. And plan is now to open up this store in 2015, same in the northern part of Germany. It is an exciting opportunity into a new market that we have strong beliefs in. Leaving our strategic agenda and also updating on something that the board have decided to do, that is to update and adjust our long-term financial targets. And just to be clear on this, the updated or the more or less the adjustment is related to our sales growth, where we historically have had a total sales growth, including the growth in our like-for-like, as well as the new stores growth that they are adding. We are now specifying this, that we are having a target of a like-for-like, so we're specifying what our long-term target is for like-for-like growth, and we are then on a yearly basis guiding the number of new stores we plan to open up every year. In terms of our operating margin, there are no changes. Our operating margin is to be above 10%, which then also includes the investments we do of 2 to 3% into new markets. So coming into the guidings in terms of number of new stores for next year, we will open up 10 stores this year. They're somewhat lower than the span that we announced early on, where we have 12 to 17. A couple of stores has been postponed, related very much to shopping center delays. Looking into next year, we plan to open up 10 to 15 stores combining in all our markets. That should summarize the ratios, should summarize some of the performance we've done so far, as well as our strategic agenda. If I make a quick comment on it, we continue to grow in all markets. We've seen particularly an uplift in traffic, which is positive. We are strengthening our market position. We are increasing our profit. We have a very strong financial situation with a very positive cash flow, and we are working with our long-term agenda to continue to develop and grow profitable Clas Ohlson. Erik, I think that leaves it over to the Q&A session.
Perfect. Thank you very much. My name is Erik Sandstedt. I'm the retail analyst at Handelsbanken. So if I start off with a few questions and then we open up for questions to the floor. So starting off more on a general high level, we've now seen 2 consecutive quarters with positive like-for-like sales after a number of quarters with negative growth rates. What has driven this change, do you think, and how sustainable is that trend?
Well, I think one need to look at each market in a way, but we are strengthening our work, which is part of it. I think also you, particularly in Sweden, you start to see a somewhat more positive consumer market. Clearly for us, what we saw in the fall already, that historically with the downturn in the economy has resulted in that we've seen less traffic out there on the high street and the shopping centers. I think it's clear that we've seen an increase in this, and particularly an increase in terms of the traffic to our stores. So that I think is part and is reflected into this, which is of course coming back as well, that we've had a few years historically that has been on a low side on the economy, and it feels like it starts to be more stabilized.
Yeah, thank you. And on your new guidance, revenue-wise, is it fair to assume that basically you're saying 2% like-for-like sales and then around 4% space contribution based on what you're saying now in terms of store openings for next year? Is that how we should think about it?
I think you should think about it that we are yearly guiding in terms of number of stores, which will change year by year depending on the opportunities we see in the market and how we are developing. Currently 10 to 15 stores, you know the average of our stores in terms of sales space. So of course that's an easy math on that one. But it gives us a flexibility or reflecting in terms of what we are really focusing on in terms of like-for-like growth, and then we are on a yearly basis, we are looking into how many stores are we going to expand into the network, also in terms of new markets and so on.
Perfect. And then a couple of questions on Q3 specifically, on starting off with OPEX. OPEX growth has been below that of store growth now for quite some time, and was the case in Q3 as well. I suppose partly driven by the fact that you're opening smaller stores, but still there seems to be some cost reductions you've done here. I'm just wondering if you could share some more light on that.
No, we work on a continuously basis in terms of trying to be as cost efficient as we can. Some of the cost development is driven by new stores. We have been more efficient in opening up new stores. We've seen a reflection out of that. I've also commented on that the productivity measures that we have historically done during the last years, we've come to a point that we are very productive in our stores, and there is not much room for that. On the other hand, when we see a positive like-for-like development, that supports really the sales or the share of cost ratio, which is a critical element for us. So like-for-like is important.
Yeah. And also on Q3 here, online sales, you talked about that in the presentation. It was up in February, but it's still not really taking off. If you look at Q3, at least in reported currency terms, it was actually down a touch. Why is that, and what is your strategy here? Is it more a question about having the site to drive traffic and then make sure that customers do their shopping in stores, or should we expect more in terms of the online sales?
Well, I think that what we're trying to view this is that we see this as one, and very pleasing to see that we clearly have a strong growth in terms of traffic to our online channels. We can also really follow and track our consumers on online in terms of how they view the products, and also how that relates down to seeing if this product is in the store near to me, and on what shelf you have this product, and if it's available on stock. So of course that there's a strong support in terms of how you look at it from call it the Rupo effect, research online and purchase offline. So that's a positive area. And then of course we continue to work as well in terms of our commercial agenda, and seeing positive both in January and February in terms of growth from terms of our sales on the online channels. But the most important part, and the way we look at it, is from a total perspective.
Yeah. One final question from me before giving some other people a chance to ask questions. But looking at the UK here, we obviously know that the sales trend is pretty strong, but how much of this is actually filtering through down the income statement, if you like? If you could just, I know you're not disclosing, but give us some thoughts here on profitability, and maybe if you could comment on a store basis, if any of the stores are sort of...
No, we don't want to comment on that, as you know, but I think the of course like-for-like growth is important for profitability. That is given in a way. And we also are working with our efficiency programs as well in all markets, including UK. So that is part of supporting the profitability in the country. At the same time, we're also investing in our marketing efforts in the UK to continue to see the uplift we have seen on the brand awareness, taken 14-15% up to 30% the last year. So we'll continue to drive that. That is something we believe is critical for us to drive further our position in the market, as well as sales growth over time.
But are you comfortably within your 3% target of the UK venture not costing more than 3% on the operating margin?
Oh, yes.
Yes. Okay, any questions from the floor?
Thanks. It's Niklas Färm with SEB Equities. Could I just ask you, after 9 months you had about 2% comp store sales growth, in Q3 3%. How does that compare if you break it down to the pieces in terms of traffic, average ticket, price, just to get a feel for what's actually driving that number? And also, if I may, with regards to your new guidance or targets, what do you think, how would that composition look over a cycle in order to get to the 2% like traffic, price, mix, what have you?
Well, I think, see if I can answer that. I think I've commented some of that by each when we went through each market, that it's been a positive traffic development. I think also very pleased to see the efforts we are doing in our stores particularly, which is relating into a higher conversion. You also see some differences by market, where we have some markets that also uplift in our ticket value. But in generally, you have a positive traffic uplift. But it's part of this is part of the whole way we work and the whole mix we do in terms of driving our range, driving the mix in our range, meeting our consumer and customer demands. Pleasing, of course, that traffic is part of something that we in one way can control with improved marketing and efforts and so on, but also the general economy is influencing that. Seeing a positive trend on that is pleasing. We are working very actively with the great staff that we have in terms of improving our conversion. So all elements in this, including ticket value, is part of how we see the total like-for-like growth. That's a given in a way. And also looking forward that we will work with all three elements to make this add up to 2.
Are there any price increases in there?
Well, price increases in terms of pricing for us is pricing. We change that on a regular basis, continuously. We have price decreases on items. We have price increase on items. What is clear that we follow the market, and we are very confident with our competitive market position, which is key for us. Today, market is so transparent and so competitive, so you need to follow it and track it almost on a day-to-day basis. So of course that you have changes on up and changes on down. We have changes on our procurement prices up and down.
Could I make one follow-up question? I was also reflecting over the fact that in terms of online sales, you're actually, as Eric pointed out, down a bit, also after 9 months. And I was just looking at the 30% increase in traffic. How does that break up into traffic price, ticket price? What
well, of course, if
Are
traffic
people
is up and you're not selling, then you, of course, then you know that, and something there.
But is that price pressure?
No, I think you need to put it in perspective that we are also meeting, comparing to the first 9 months, we are really meeting the launch period last year, where we were very, very active and aggressive in terms of how we launched the new platform. So we are meeting this. We are now out of that, so we're starting to have more like-for-like comparisons. For us, it's very much in terms of driving this agenda, where our effort is to inspire and improve the experience for the consumers online as well as offline. And in our case, you have, again, a lot of customers with the new platform appreciating the platform in terms of looking into the products I'm interested in, or searching for an issue that I want to solve. See, can I find that at Clas Ohlson? Yes, I can. That saves me, again, coming back to some of the time pressure we see that supports me as a customer to help. Do I have that? Okay, I know it's in the store. I go down there and I shop it.
Hi, Clas. Martin Anell with ABG Sundal Collier. I have a question on the updated sales target for the long term. Previously, you included new stores in there, and now you don't. I know that you're going to guide on a full-year basis, but how we're going to think about the long-term store potential target in the main markets, and what's mainly the reason for you changing the old one?
Well, I think the reason is very clear. It's clear is that we have a clear target, and we want to specify that target on how we work on the like-for-like sales. Then you're coming into your comment in terms of how do we see it. I mean, Sweden and Norway, our most mature market, as you have seen now the recent years, we are not adding so many stores into this market. We will not do that as we move along. We see great potentials in the new markets, but we're also in the establishment phase. And of course, when that starts to go in the right direction, we can ramp up number of new stores as we move along. So I think it reflects in a better way the phase that we are in the company, as well as it provides a better guidance in terms of what we can look in terms of total sales on a year-by-year basis.
And on the like-for-like target, how confident can you be about at least 2% growth per year? I mean, given the recent years and also the increasing competition, both in the physical space and the online space.
No, I think that this is our target. We are really working on plans to strengthen the Clas Ohlson concept in terms of how we develop, and we see in clear positive signals in terms of that we are getting more and more loyal customers. We are increasing our number of customers to our sales channels. We are converting better. They are appreciating the range. But this is an ongoing, as in any retail. You need to serve the customers, and you are rewarded every day, and you need to, on it day by day, develop yourself to make this happen. So it's up to drive that agenda.
And then just a final question on the gross margin development, which has been quite impressive in the last 2 quarters. Do you think that this is a sustainable level where we are now, or looking into next year? I mean, where do you see that heading?
No, I think if you break it down in a way, even if it's, again, as you know, there are many things that is influencing the gross margin. If you look at the currencies, as we've seen, if you continue to have this negative pressure on the NOK, now we've been balancing this very much from the dollar. That will, over time, everything equal, fade out. Freights will also fade out over time. Then I think it's important to say, when you're looking at the Q3 and the strong uplift we had a, which we commented Q3 last year, a negative mix effect last Q3 in terms of, and I think that we're balancing that negative and even had a positive mix effect, so that's why you're getting a positive. So you're meeting, you need to look at it, we're meeting an easy comps in terms of that for this quarter.
And the new distribution agreement, how much could that add?
Well, it will support us, but in the whole, I mean, it will not be that, so you see a big difference in our gross margin, but it will be a supporting factor.
Thank you.
Hi, this is Stellan Hellström with Nordea. I just wanted to come back to your favorable trends here in traffic conversion and the ticket values. When you talked about Sweden, you were very pleased there, and just to get the equation together here, I mean, it seems that still that your store space growth is faster than your sales growth. So how does this add up?
In terms of like-for-like or traffic performance, you mean?
Well, I was thinking that if your traffic is increasing, then I mean I would assume that your conversion or ticket values would be going down.
No, I mean, I think that we have added smaller stores in Sweden, so if you cannot compare that space by space. And in terms of Sweden, we've seen a traffic uplift. Again, reminding on what we talked about a year ago and what we are meeting against is a very soft traffic development in general. Now we've seen a clear positive uplift in the traffic to, I would assume, have not clear data on that in terms of high street and shopping center, but particularly in our stores, we've seen an uplift on that. And we're also looking at from a Sweden perspective, the work that they are doing in the stores is improving in terms of our conversion.
All right. Also a question on UK, if you could say there, traffic is also going in the right direction in the UK?
No, traffic has been, I mean, we've coming from a level in the UK which is starting to improve, and it's not even, traffic is more or less flat for us. What we are seeing is other items in terms of conversion, also ticket value in the UK, and strengthening our position of the consumers. We're seeing a higher degree of customers being into our store historically and coming back.
Okay, thank you.
Hi. Have you, during 2013 and also moving ahead in 2014, closed down any shops or decreased any store space, both in Sweden and internationally?
We have not, well, we have moved stores. So in that perspective, we can say we have closed the store and moved it to another location. So that we have done, and we're working on our space, and it's a part of our day-to-day to review our location to see can we optimize space, both in terms of increasing and decreasing space, also depending on activities that happens in a shopping center, etc.
But moving ahead for these new stores, do you see like 5 or 10% less store space? No,
it's a growth. When we are closing a store, it's very much relates to that we're finding a better location in the same area. And to be clear on that question, then that the 10 to 15 is not included if we are moving a store.
Mm-hmm. Could I follow up with a question on gross margins? Could you put some numbers on the private label share in Q3 compared to Q3 last year? And could you also give us some example of the mix categories that have been more important to drive gross margins?
No, I know you're interested in this, and I think, I mean, the private label is, it's going upwards. It's also part of how we are strengthening the private label. We are on a 26, 27 share rate going in the right direction, but it's also part of what we have. If you look into our stores and looking into our private labels, we are really also strengthening, and which seems to be very appreciated by the customers in terms of the design, the quality, and how we are lifting up the range in our private label sector. So that I think we'll continue to work on this. That I think is part of how we are getting more and more loyal customers. and in terms of categories, there's a competition out there, and there are reasons why we are not disclosing individual categories and how we're developing.
I was just thinking, you said last time around it was LED lights and electricity items.
Which is not a category, which is a product area. But you have that, and I think if you're looking into it, the whole energy saving items in terms of how consumers now start to use the new technology is very, very positive trend, and it's also, I would say, we have taken a very, very strong position in this towards the market in general.
Could I also ask, the currency effect, the transaction currency effect, is that a slight net negative or a slight net positive in gross margin change compare a year ago? I'm talking about the translation effect from the Norwegian krona and the US dollar.
The total effect is negative.
Negative,
yeah.
Okay. Could I have one more question? Thanks. I was also looking at inventories per store.
Yeah.
They're about 7.3 million, exactly the same level as last year in Q3, going out of Q3. How do you see that level? Is that a reflection of where you just simply think you should be at this stage in the cycle? Or would you have been able to sell more even in February if you've had a high inventory level leaving Q3? Could you elaborate a bit, please?
I think that what we look at is the whole pipeline effect in terms of both our distribution center and how we match and meet this. And I would say commenting on the Q3, I think the performance we have seen on the distribution center has been one of the better we have seen over the years in terms of, because of course it's an extremely hectic period to fill up the stores during this time, and we need to have a very efficient machinery in this, and they've done a fantastic job in this quarter, which has supported our sales mix obviously on that. We are not facing, if you're indicating that we should have too low inventories in our stores at the moment, that is not my point of view at this stage.
Okay, we have received one question from online. Why is it a good idea to enter Germany where the growth rates are only around 1%?
But it's clear for us that we are coming into a completely new market. And of course, if you look at the total market spending in our categories, it's fantastically large in that perspective. So we are looking into, of course, taking a market shares in this market, where currently if you're looking at our position in terms of where we locate our stores, and there is a clear gap in the city centers for the kind of offers that we coming in with. So we think that will benefit, which will more take market shares rather than coming from a growth rate in total in the country.
But if you compare startup costs for Germany with that of the UK, how should we think about that? Should we view this more as a online venture supported by a couple of stores, or are you actually planning?
We will go with stores and supported with online, which will be so we are, as I said, we are looking now into finding the right location, and then in terms of depending on, of course, the size of the store and so on, in terms of the investments around that.
Operator, do we have any questions from the conference call?
I remind you, if you have a question for the speakers, you will have to press 01 on your telephone keypad. 01. There are no questions on the telephone.
I'm going to ask a couple of follow-up questions on the UK. Firstly, short term, I think you're now coming up to some pretty challenging comparison figures, as like sales really took off about a year ago. How should we think about that going forward? Will that dampen your sales growth?
Well, of course, our ambition is clear that we are working on increasing our sales growth in the UK. We're doing activities with our range, we are doing activities in our stores, and we are also particularly investing more in our marketing spend. So our ambition is to continue a positive sales growth development.
And I think some of your stores now in the UK, you've actually passed the exit time, if you like, so you could leave the stores by simply not renewing the leases. Is that something you're contemplating around, not scaling down perhaps, but changing the locations? You're pretty spread out in the UK to rather focus on a couple of key areas like the London area, for example?
Well, there are always, in any market, same goes for the UK, is that when you're having a lease expiration or expiring, that gives an opportunity to move or to reflect on if there's any changes you want to do, store size-wise, etc. So that is on a going basis equally to all other markets.
Yeah.
So we are reviewing this, yes. We're reviewing.
And just the nitty-gritty on the store growth target next year, 10 to 15 new stores. How many of these are on a franchise basis in the Middle East, and how many will be your own stores?
Well, as you have seen, we have been clear on that our plan is to open up 2 franchise stores now the coming years to then evaluate and then further go on. So that is then the target within this.
Perfect. Any other questions out there? Niklas?
Sorry. Can I just come back to the gross margin? Looking at sourcing costs, is there anything different you made to the structure which could imply better or sustainable bought-in margins going forward? Or is this mainly just a reflection of cheaper sourcing in the cycle?
Well,
cheaper transportation costs?
Yeah, I mean, if you're looking at it, it's a reflection of the sales mix, which is the larger part. So the sourcing, we've taken steps. We have structurally changed some of the way we are sourcing. We continue on that agenda. We continue to increase, and also, of course, which gives a benefit that we're getting closer to the sourcing market, could work more integrated with the manufacturers that will, over time, improve our sourcing, and also in terms of developing our products and developing the quality of our products and so on. So that is a clear strategic agenda that we continue to work on. And as I showed in terms of the long-term trend, sourcing is part of that. Where we made a jump, we will continue to see improvement, even if it's not on the larger scale. Very much now relates to how our ability to come up with a positive sales mix and drive that agenda for us. Again, then, reminding again of that the promotion mix last year was very much influenced by a higher share of activities and higher share of campaigns and higher share of markdowns.
Thanks.
Yeah. One final question from me. Looking at your balance sheet, you have net cash on the balance sheet now, and whilst you might need some money for international expansion, could you contemplating something like a share buyback program other than for share options going forward?
Well, that's not only on my decision, as you know. So at this stage, we have nothing on that agenda to be communicated.
Okay, I think unless we have any further questions, I'll leave it to you, Clas, for perhaps a closing remark.
Perhaps say thank you. Thank you for the interest, and thank you for coming. And looking forward to a positive spring, and hope that you shop a lot at Clas Ohlson. Thank you very much.